is it time for correction? Obviously, we've seen the market in a boom for a while. So is it time for correction now? These and other things is what we'll be discussing with Mr. Johnson Chukwu, the Chief Executive Officer of Carry Asset Management Limited. Mr. Chukwu, good morning and welcome to the program.
Good morning, and thank you for having me.
So is it time for a correction in the market? We have been enjoying the gains. We've seen the boom, and we know no market stays on top forever. Should we be preparing ourselves for a correction?
What I would say is that there is a possibility that some stocks will witness corrections in the near future or in the immediate future. I think it's better to say the near future so that I say the immediate future, because there's still a lot of excitement in the market. There are stocks that are patent clearly overvalued, but it's not across all quoted stocks that you can say is overvalued. So those that are overvalued, by the time investors realize that they are not making enough profit to justify their market prices, investors, and bear in mind that many investors are looking for benefits. So beyond capital gains, investors are largely looking for benefits. Are they paying interim dividend? Are they going to pay final dividend? And if a company is not paying both interim and final dividend, and they realize that the stock price is clearly cannot justify, the intrinsic value of the stock cannot justify the price at which it is selling, then investors may likely move away from such stocks. So you may see some correction, but the corrections is not going to be a blanket correction. The correction will be focused on those stocks that are clearly overvalued.
So we saw UBA, because they didn't pay dividend. We saw a lot of profit taking on them. And then we also saw an Access Holding. And then there's the news to Access from the CBN, you know, that some of those are international assets. We saw they did a lot of acquisition last year, but it seems they are now being instructed to lose some of that. And it does, and since then we've seen the price. The price has dropped from 30 to 25 naira. I believe yesterday it closed about 23 naira, talking about Access. Would we say that perhaps some of this news streaming in now overtakes the sentiment of investors taking position for earnings?
No, what I would say is that, like I pointed out earlier, that decisions of the investors, particularly the discerning investor, the PFAs, institutional investors, are based on facts, their projections of future earnings of the company. In the case of Access Bank or Access Corp, bear in mind that they did not pay dividend. People were expecting they would pay dividend. And if you look at their performance for 2025, you actually see a very strong performance. Gross earnings grew to 5.5 trillion from about 4.8 or 4.7 trillion. We saw profit after tax at 743 billion, up from about 642 billion. So those are quite strong performances. Of course, earnings per share declined because of the increase in number of listed shares. I don't think that's why investors are. So investors are not exiting or selling their stock because of performance in terms of financial performance. They obviously protested that dividend was not paid. Then on the issue of rationalizing some of their offshore subsidiaries, it's beyond the central bank directing that. It's just a rational thing that businesses do. If you have multiple operations outside the country and you need to capitalize it, because each banking institution requires a minimum capital base. Everywhere in the world, there is always a regulatory capital and operating capital you need to operate. And the investment you made, the investment you made in that particular jurisdiction is not giving you enough return as to justify to continue to hold that investment. The appropriate thing to do is that you assess it and say, look, I can't continue to keep this investment. I don't know how the CBN arrived at the decision to ask them to rationalize, but I also believe that the management of Access Bank, the board of Access Bank, would have viewed as appraised their investment in other parts of the country, other parts of the world, and determine those that are not profitable. And they will be willing to sell them down or offload them to other investors and invest that resource elsewhere, maybe in the local market or elsewhere where they are making good returns.
So, I mean, you said that perhaps investors are protesting. They're not paying the dividends. Do you know how long this protest may take? Because the price is really dropping.
Well, I think it will soon bottom out, because if you look at the current price, about 23 naira, and you consider their offer price was about almost about 20 naira or thereabout, the last offer they made. So you're going to get what we call support level. That support level is a level where the investors are saying, look, I bought this at 20 naira or thereabout, and it's 21 naira. Even if I sell at 22 naira, the cost of exiting that stock will even make me to take a loss. So I will hold. And given that the underlying fundamentals of the bank is strong, like I said, profits grew by about 13% from about 642 billion. Profit after tax to about 743 billion. That is very important. And if you look at the top line, which is the revenue, it's also grew by about 16% to about 5.5 trillion. So, and they also grew their balance sheet for about 51 trillion. And I think those are what investors will be looking at. So bear in mind that investors will protest. It is always emotions attached to investment. And if you expected a dividend from one of the fugas banks and they didn't get it, just like they didn't get from UBA, and you could also see that even the negative sentiment on UBA is moderating when they began to moderate when they saw the first quarter return performance of the bank. So I think we're getting the support level where investors are not going to sell the Access Bank holding, because selling it will mean locking in losses. Because if you take out your transaction cost and you compare, even if you bought the public offer, that is the last public offer, you're going to take a loss. So at that point, investors will hold, unless they have other factors, other reasons to want to exit. But if it's based on their financial performance, or that the central bank directed them to sell down some of their maybe not very viable offshore location investments, I don't think that would compel investors to want to lock in losses on a company or a bank that is profitable.
All right, so of course we did see that happen with UBA, and then over time we saw that the investors came back again and sentiments turned around. So I'm sure that will be the story of Access Bank. But let's look at the market wholly now. At first, we were told that it is the pension funds that's driving the liquidity increase, liquidity we saw in the market. And we're still being assured, I believe. I attended the NGX AGM, and the executives there say that it is domestic fund that's still driving these positive sentiments we have generally in the market. But the pension fund, is it still the impact that's pushing the market, or are there other funds that have come in? Because, I mean, the market is actually very positive.
I think a large portion of what we still have in the market is still local investors. Of course, Nigeria got some relief by when FTSE removed Nigeria from, brought Nigeria into the frontier market portfolio. So that should only bring foreign portfolio investors. But we're yet to see that. Bear in mind, we're moving towards an election period. And we're also, the world is witnessing a very volatile macroeconomic environment. So investors are not ready to take risk in emerging markets, particularly variable income assets. So I don't think foreign portfolio investors are going to come in immediately. So, but you have a reasonable volume of liquidity in the country today. If you look at how investors play the market, you observe that when yield and fixed income instruments come down, decline, investors shift on their portfolios in fixed income instruments and overweight them in equities, which is what is happening. We've seen Treasury bills yield dropped about 16.15%. In the last few auctions. I think this week's auction came at about 15.19 or 15.15%. So investors are looking at equity market has given me, as at the close of business, equity market has given them about 54%. So you compare that to about 16%. Then you say, look, I'd rather play the equities market than to play in the fixed income space, because the yield or the return on equities is far above the return you can get in the most viable alternative investment class, which is fixed income. So investors start staying in the equities market. And bear in mind that beyond the PFAs, you also have institutional investors. You also have a huge percentage of retail investors who are coming back to the market because there's no more liquidity in the economy. Last week's Treasury bills auction, about over 2.2 trillion was bidded for just about 600 or 500 billion that was on offer. And the rest of that money that didn't get win their bid, they will look for alternative investment instruments, and the equity market presents that. Like I said, the most important, the equity market has given a yield, return year-to-date return about 54%. The fixed income yield is about 16%. So it makes sense for you as retail investors to play in the market. But I always advise that nobody should follow the sheep syndrome. or the head syndrome, because people are buying. So people are looking for what is the next penny stock. Let me buy. You have to make sure that you buy fundamentally strong instruments, because like we said earlier, we may see corrections. The correction is not going to be across board. The corrections will be largely on those stocks that do not have strong fundamentals.
So, I mean, I've also seen, I think it's a new trend. I don't know how coordinated it is. And I'm sure you've seen in some of the social media platforms, there's adverts about the NGX and all that. Do you think that's also maybe contributing, widening the knowledge gap or widening the knowledge base for Nigerians when it comes to the stock market?
Yes, a couple of factors are broadening or widening the knowledge of investors. One, the positive public relations that NGS and public communication NGS is doing. Comments, statements from Nigerian Security Exchange Commission assuring investors of the integrity of the entire capital market. Then, for the operators like us, Cowley said, we now have multiple channels that people can trade, access the market. You have your web-based application where you can use your laptop, your iPad, your phone to log in and trade directly. You have your mobile applications. So all these things are incentivized or creating awareness about the system. And bear in mind that if you look at the demography of Nigeria, a lot of young people are more educated. A lot of more young people are looking for investment options. They are investing in cryptocurrency, all sorts of asset classes. And because you now have convenience in terms of tools which to use to invest, so people are getting more awareness. Financial inclusion is expanding at a very lot more knowledgeable about where to put their money. People no longer put their money under their pillow like we used to say. People know that the time value of money, every money you have should work for you. People are talking of alternative multiple income streams, and they're looking at where else we are investing: equities market, fixed income market, real estate market. So that level of awareness is a lot more heightened, and that's why the capital market, equity market, is one of the beneficiaries of the improvement in knowledge base and financial inclusion.
And now we have the T+1 starting on the 1st of June. I guess that should also drive some positive sentiments to the market.
Yes, but beyond positive sentiment, one of the greatest benefits of shortening the settlement cycle is increases transaction volume, increases transaction turnover. So I can buy today, settle tomorrow, or settle on Monday. Today is Friday, I buy on today, Friday, settle on Monday, and as I'm settling, I can use the same process to play the market on Monday. Unlike you have to wait for T+2, where it will settle on Tuesday. So it's only when I expect my inflow to come in I can trade. So you can almost trade based on the fact that your trade, the previous day's trade, is settling that day, and you can apply the process to a trade knowing before you settle the following day, before it's due for settlement, you would have received your proceeds. So that increases transactions volume and the velocity of investment in the market.
But I wonder if the extended trading hours has had any impact yet, or we're still watching.
Well, you know, it's very recent. I mean, the station started, I think, on 27th of April. So today is just 8th of May. But you're going to see that in the daily volumes. By the time we see the close of volume traded this week, we may see an improvement in trading volume. And bear in mind that the extension in time, the trading time, is targeted at people in other jurisdictions outside Nigeria, in other time zones. So awareness has to be created. The other supporting macroeconomic conditions also have to be more appropriate. Like I mentioned earlier, you are dealing with a very volatile global macroeconomic environment where investors are pulling back from what they may call higher risk emerging markets to stay in safe zones. So all those things have to reverse. And then investors in countries would have different time zones when Nigeria would be aware that they can now, the markets are open to them to trade. And it will take some time for us to get that level of pronounced change or improvement in volume driven by the change in trading hours.
All right, Mr. Johnson Chukwu, thank you so much for your time and chatting with us. Mr. Johnson Chukwu is the Chief Executive Officer at Cowry Assets Management Limited. Thank you and enjoy the rest of your day.
Thank you for having me.